Our topic for this particular class is capital markets, and this is also part of the scheme of work for this second term. Just like I told you, I will not be able to explain this in the classroom, so that's why this video is very necessary for you to watch and also read up from your notes. Let's start with the meaning of capital markets. The lesson objective is for you to be able to know the meaning of capital markets. You should be able to state the benefits of capital markets, and you should also say the general benefits and importance of the capital market. So we're also going to look into definition of some basic terminologies. So let's start with what is capital market. The capital market is a market basically meant for the purchase and sale of long-term securities such as debentures, stocks, and bonds. So if you look at all these three items now, debentures, stocks, bonds, they are the instruments of capital market. They are all long-term securities. When we say long-term, it means it goes for a long period of time. If you buy a share of a company now, you become a member of the company. So for as long as you have not sold the shares, you still become a financial member, a shareholder of the company. That is why it's called long-term securities. So where capital market is where all these are sold, are traded, or purchase and sale of long-term securities. Benefits of capital market. The capital market is important to the following. We should all know that the financial components, financial system components are four. We have individuals, investors, we have the government, we have the economy, and we have companies. So all the capital market is important to all of them. But generally, we are going to highlight the importance of capital market as those. Number one, it enabled investors to know where and when to invest their money and the benefit they will derive from their investment. For example, you want to buy a share of a company, you have to know the capital market will give you information on if it is advisable for you to invest in that particular company. So the benefits include dividend, bonus issues, right issues, etc. If a company dividend is high, you want to invest in such a company. That's why we have blue chip shares. You have to get to know more of this in commerce. So it assists the government in complementing its efforts in financing essential socio-economic development projects through raising long-term project capital base. For example, the federal government of Nigeria raised Sukuk bond for the construction of some roads in this country. So governments can also raise funds to help their budgets. It helps to construct capital-intensive projects. They can raise funds through the capital market. So that is through bonds. It's an alternative source of financing for deficit budget also. When the budget is deficit, that is, the expected expenditure is more than the expected income, the government can get more finance through the capital market to augment the budgets. Okay. Number four, it is a source of employment generation. Many trained individuals such as stockbrokers, jobbers, agents can work in the capital market. You as a student also, you can build up a career being a member of the capital market. You can be a stockbroker, you can be a jobber, you can be someone, investors. So it's a source of employment generation. It helps companies in accessing capital for expansion of their business. As a business owner, a company, you can get your funds, capital, by issuing out shares to subscribers. It boosts the image of companies. It boosts the image of companies when they are listed on the capital market. Every company would always dream of becoming a listed market, a listed company on the stock exchange market. That is a quoted company. If a company is quoted on the stock exchange market, it's gives the image, it projects the image of the company. Everybody will want to be a shareholder of the company. Also, it gives company access to cheaper funds that would have been raised from financial institution. Unlike you going to the bank to raise funds for the business, if you are a quoted company that is listed on the stock exchange market, it gives you opportunity to see cheaper funds, and it doesn't require you to pay excessive interest, unlike if you go to financial institution like banks. So that is the benefit of being a quoted company listed on the capital market. So another one is that it improves the standard of living in the economy. So generally speaking, if the capital market is one of the strong economic indices that is used to know a company or a country GDP, is their capital market. How strong is their stock exchange market? If the stock market is rising, we say yes, the stocks are rising, the country is going well economically. But if the stocks are falling, it shows a very poor indices for that country. So generally speaking, the capital market improves the standard of living in the economy. Now let's look at some basic terms. The first term we are going to look at is dividend. You all know that, but we are just going to reiterate it in this video, that dividend is the amount of money paid to shareholders of a company out of the profit made. So at the end of the year, the company will analyze what the profit they have made, and the shareholders in their annual general meeting would agree on which percentage will be shared to the shareholders as dividend. Collateral securities, you know what collateral security is, but let's also delve into it. Property which has served as a guarantee for accessing loan from banks. For example, it can be a land, it can be a building, it can be something fixed asset. Majorly what can be used as collateral security. So those, before the banks can issue out the loan, they will need a collateral security to serve as guarantee that a customer is going to pay back the loan as at when due. If the customer fail to pay up, the banks, they have the legal right to seize the collateral security. Then other one is bonus issue. This is also very important for you to know. It's an extra share companies give to their shareholders depending on the rate declared and in proportion of the number of shares held by shareholders. For example, a company can award an extra share for every 100 units of share held by shareholders. So it is now the responsibility of the in the annual general meeting and the board of directors of the company, all of them, to decide if they will issue out a bonus issue to the shareholders, depending on, and this is based on the number of shares each person has. So another one is right issue. Right issue is this thing is very important because you need to know the difference between bonus issue and right issue. Bonus issue, you are not paying anything to the company. It is the company that is giving out the shares as bonus. But in the case of share issues, there are new shares which are offered for existing shareholders at discount rates with the aim to raise more capital from the market. So which means that it is discounted. But in the case of bonus issue, there is no payment at all. So for example, a company may declare a right issue of 2:3 at 100 naira per share, while the market price is 150 naira per share. Because these are the basic terminologies we are going to be talking about for this moment. Thank you, and I hope you get to understand this very well by the time you listen and watch this video. Thank you very much.